As we are within the last 3 days of 2025, let's make it our aim to look forward in anticipation. What is it that we can anticipate for 2026? What's coming? What are we looking forward to as a community, as an ecosystem, as an industry? And this is a nice way to kickstart the session today. And our Clarity Act is a bill, is a regulatory framework that once put in place, it literally can make or break the crypto market for 2026. And here, let's hear it from one of the asset managers. It's a $15 billion asset manager. They have $15 billion in asset management. And this is Bitwise. And the CIO explains something that we just said. So it's just emphasizing something. And like we always like to do, we just like to make a statement. And then after that statement is done, we want to verify it, fact check it, and just see what we can take away from this session today or this statement today. So let's tune in. I hope you can hear the audio. If not, I'll link this specific post in the description section below. So let's tune in real quick.
I think Clarity is like the Puxatawny Phil of crypto of this winter. I think if Clarity doesn't pass, it's going to push us into a deeper, it's going to be hard for crypto to rally. I think if you do see it pass, that's probably something like the all clear signal on this pullback. And we could see, I think most assets, and particularly ETH and Solana and others, move to all-time highs.
Right.
I think Clarity is like the...
So you hear he's saying that indeed, the Clarity Act is a make or break moment, and smart assets, specifically smart contracts, and such as he mentioned specifically Ethereum and Solana, and we'll get to that. Why is he mentioning specifically Ethereum and Solana? We'll get to that. But as for now, let's just keep in mind that indeed we are having a make or break moment next year in terms of the bill being passed, in terms of Clarity Act. So now that we have that, what do we know so far in terms of the Clarity Act? So we're hearing it from the US crypto Caesar, David Sachs himself. He's saying that they're closer than ever. So this Clarity Act markup confirmed for January. So January is the month for it, specifically because after January, end of January, everything else, the whole focus will be midterm election. The whole focus now will be politics now. So this has to pass in January. And from the Caesar, David Sachs himself, he says that they're closer than ever, and it's confirmed for January. So this is a great, great point because it's a make or break moment for DeFi specifically, because this clarity is focusing on bringing clarity for real world assets, tokenizations as a whole, whether it's commodities, stablecoins have already been issued, like we saw in terms of Genius Act. However, real world assets like tokenized treasuries, tokenized commodities, securitizing stocks, and so on and so forth, all of that is necessary. In order for that to kick in and to gain mainstream adoption, this Clarity Act needs to be put in place. And January is the month. So what would that mean? What does that mean for us? So once all of that is put in place, and keep in mind, these are all tokenized real-world assets. And we're talking about trillions of dollars, if not quadrillion industry. For example, Forex market alone is over $quadrillion. The real estate market is over 600 trillion. We have the bond market, we have the real estate market, commodities, the stock market, and so on and so forth. So all these will need a lot of liquidity, and we'll look into it shortly, how much liquidity it takes to cover all these tokenized assets, because they'll have to be paired with stablecoins. And we'll get to that as well. So for now, SharpLink believes, CEO believes, who is Joseph Levine, a co-founder of the Ethereum Foundation. He believes that the total value locked on Ethereum is going to hit a 10x in 2026. So if David Sachs, the crypto's crypto czar, is right, and they managed to put the bill, pass the bill, Clarity bill in January, there's a high chance this happening. And if this happens, what does it mean? What does it mean for Ethereum? So first of all, high economic value for validators in terms of higher staking yield. So the staking yield is going to be much more higher, especially for validators and stakers, of course. Deeper liquidity, of course. This is what we are looking forward to. You want to be able to retain all this liquidity. And for that, you need an ecosystem that is fundamentally sound, that is strong, and higher fees density, of course. But most important, this right here, real-world assets and stablecoins scale. This is exactly what we are talking about. And Ethereum is the trusted layer for finance, like we know now. It's literally the trusted layer for finance. And this is not just wishful thinking. These are facts, and we're about to look at it even closer. Talking about real-world assets and stablecoin, let's look at stablecoins. Stablecoins have been hitting all-time highs after all-time highs based on market cap. And now it hit another all-time high this week, and it's at 310 billion. I remember when we started at below 200 billion, and now we're already at 310 billion, but we are still at the very early stages. How early? Look at the last bull cycle. The largest bull run we had yet to date was in 2021. And in order to just demonstrate how stablecoins play a major role, liquidity plays a major role, look at when last bull cycle, which reached its peak in November, December, you see how stablecoins hit their peak. And this was so far the largest bull cycle yet, if not one of the largest bull cycle yet. You see how before 2021, stablecoins were not really that much, but then the first push led all the way here. And keep in mind, this was without tokenization and all of that. Now, another thing I want to highlight here is that it dropped. We were going through a bear market all the way until end of 2023. And then what happened? Why do we see all this surge in stablecoins? Let me remind us, January 2024, what took place here? For the very first time, Bitcoin ETF took place. So majority of these stablecoins went towards Bitcoin. This is where Bitcoin went from literally 20K all the way to 120K or 129, right? All-time high. And this was a push based on the hype that the election was kickstarted by Bitcoin ETF, right? January 2024 was the very first crypto ETF, which was Bitcoin. And then it kickstarted throughout the election. And then this is when Trump said that they're going to make Bitcoin the current global reserve, strategic reserve asset, and boom, it skyrocketed, stablecoin even more. So now, none of this so far includes tokenized assets like we just discussed. Real-world assets are not even in yet. So the talk is that it's going to at least, stablecoins is going to hit $1 trillion by 2026. So we're at 300 right now. So that means with stablecoins, with the Clarity Act in place, with all these tokenized assets that are needed to be paired with stablecoins, we can anticipate for 2026 a 3 times where we are right now. And this is why we always say that this bull cycle is going to be massive. And you don't want to miss this gold rush, this liquidity rush. And now let's start answering the question, why did the individual at the beginning of the session mention specifically Ethereum and Solana specifically? So let's look at that. First of all, let's pay attention of the if you look at the entire DeFi market, the total locked value in DeFi sits at 118 billion. This is not much at all. If you look at the entire assets, all these assets that are yet to enter the space, I will be in the trillions tens of and hundreds of trillions, right? So that just shows you this is just a drop in the ocean. However, the point we're trying to make is that the reason why the individual was talking about Ethereum specifically and Solana is because of this right here. Out of the 118 billion, 68.6, almost 69 billion alone is on Ethereum alone. So for those math wizards, you found out that that's roughly 57%. So 57% of all the DeFi total value locked is on Ethereum alone. And then the second best is Solana. This is why he was mentioning Ethereum and Solana, because these are the two largest smart contract layer 1 blockchains with the most total value locked. And the number one is Ethereum by far with over 57% locked value. And now let's look at the second best, which is Solana, 8. And in terms of percentage of the total, this only represents less than 7%, less than 7% of the total value locked. So the second best DeFi platform in terms of total value locked in DeFi represents in percentage less than 7%. That's the second best. While Ethereum is taking the lion's share of over 57%. So this is why he was specifically mentioning that those that will make the most, benefit the most are these two, and predominantly Ethereum, because this is where stablecoins are alive. Most DeFi platforms are alive. And this is where they find their home. So if we go further, what does that mean? Why is DeFi so important now? The more important is this now that DeFi platforms have sustainable mechanisms, strong fundamentals, because now with all this liquidity coming in, all this volume coming in and flooding Ethereum, and we're anticipating, we're at 300 billion right now in terms of stablecoin market cap. And the news is by 2026, it should triple. It should, 2028. By 2028, we hear that it should triple. So from 300 to $1 trillion in terms of stablecoin market cap by 2028. And that means a 3x. So within the next 2 years, we're supposed to experience a 3 times larger stablecoin influx, liquidity influx. So this is why it's so important for DeFi platforms to have strong fundamentals. Now, Unichain or Uniswap finally is turning on the fee switch. What does that mean? It means that they are literally starting to ban the Uni token. They're starting to ban the Uni token. So already they are banned out of their treasury. They banned 100 million Uni token. Let's look at it even clearer here. So they call it unification, and it has officially been executed. This, what we're talking about, took place just yesterday, right before midnight. Right before midnight. So 11:49 p.m., December 27th. And what this means is that for the first time in Uniswap history, and we'll look at how old Uniswap is and all that in a minute, but for now, they turned on the switch, the fee switch, meaning that, first of all, they started by banning 100 million Uni tokens from their treasury. And they removed it from the circulating supply completely. And what this means is that they're starting a banning. They kickstarted a banning mechanism now. So now there'll be, the Unichain will be using their fees to ban Uni token. What does this mean? And what was the effect of this news? You can see for yourself. The volume increased by over half, over 50%, almost 55%, as you see here. The market cap increased by over 22%. And we're talking about within the last 24 hours. The price pumped 5.5%, right? And this is when the news came. 11 p.m. The news came right here. We were in the red, down here. And since the news came that Uniswap, the switch is turned on it's starting to ban its supply using its fees that it's generating and removing total supply, circulating supply from circulation and banning the tokens, look at what happened. What effect did this give? You see how the token pumped and went all the way to where it is now. So if you're talking about fundamentals, if you're talking about DeFi, mechanisms, fundamentals are very important now, because liquidity is getting ready to be flooding the industry, specifically Ethereum, like we just discussed, because that's where majority of total value locked, almost 58% of the entire DeFi total value locked is on Ethereum. And now for DeFi platforms, you want to have them having strong fundamentals to make the most out of this liquidity rush that we're about to experience. And Uniswap made the first step by starting to ban its tokens for the first time. I want us to look at something. If we go to About here and we scroll down here, even though Uniswap launched in November 2018, so almost to the date, almost to the month, 7 years ago, it took them 2 years before they came up with their token, actually. And so the token itself is 5 years old. And after 5 years, after the launch of their Uniswap token, is when they started banning tokens now. This is a great start. This is a great point. And this is just one of the 4 challenges. Banning is just one of the 4 challenges, but it's the major challenge. It is so huge that, as you see, the news made this token skyrocket. It went all the way from here. This is when the news came up, 11 p.m. And boom, since then it just went up. Just because banning mechanism, that's it. And as you see, over 50% in volume, over 22% in market cap, and over 5% in price appreciation, just because of strong fundamentals announcement and implementation. So what does that mean? It means that finally, someone who understands that real value comes from banning the excess and letting scarcity do the heavy lifting. This is how you build an empire, not just hype. This is the best statement that can really covers and summarizes this session of today. Fundamentals are very important. And this is why in our ecosystem, the Bullrun ecosystem, with our staking platform, we go above and beyond just banning tokens. How are we doing that? With the Bullrun ecosystem, banning is just one of the 4 challenges that we're addressing. We're going above and beyond just banning. Let me show you. So we do ban, and our ban is from the total supply, not from circulating supply, from the total supply. So with our banning, we started with 1 million in total supply, and now we are sitting at 900 and below 959,000. So we banned already 40,000 BRL tokens from the total supply. We'll never see them again. But we go above and beyond just banning. We also add and retain liquidity. So we're retaining liquidity. Why? Because liquidity rush that is coming right now, like we just saw, the tripling of stablecoins within the next 2 years. Clarity Act, once implemented, all these tokenized assets, real world assets, are about to pair with stablecoins. A lot of liquidity is coming in. You want to use this opportunity and retain as much liquidity into your platform, in your ecosystem as you can. A second thing, staking plays a major role. You want a staking platform that is not causing inflation. So when you stake your tokens, you don't want to have native tokens, because it just brings in sell pressure, meaning that in order to cash out, you have to sell your native token. This is why we took a different route. So we are accumulating USDC distributions, and we're issuing out USDC distributions. So we're accumulating it for the stakers. Those who are staking will receive USDC distributions, not BRL tokens, to reduce the sell pressure. And then once you use your volume efficiently through liquidity, Now you retain liquidity with your volume. You burn the supply from the total supply, becoming really scarce, and you accumulate USDC distributions for those who are staking BRL token. And this is how you address the 4 challenges. Burning is a great start. It's very good. But in order to make the most out of this liquidity rush that is coming, you need to be complete as an ecosystem. And in addition to just burning, you need to be retaining liquidity also, and you need to also accumulate rewards, staking rewards, and make them sustainable in a way that it doesn't run out. It's perpetual and based on the trading volume and based on the liquidity. So with that said, community, this is the message for today. I hope that we were able to get something out of it, and I want to wish you a beautiful Sunday, and till we meet tomorrow in our Twitter space. And for those that queens that are not yet participating in the Queens session on Sunday, I highly encourage us to do so. With that said, community, have a wonderful rest of your Sunday, and till we meet again. Bye-bye, everyone.